Hello traders, Gary Wagner here. It is 11:48 in Honolulu, 5:48 in New York on Thursday, 7th day of July, 2022, and this is the daily report for gold and silver. Although today's gain in gold was fractional at best, it was the first green candle we have seen in the last 7 consecutive trading days. Prior to this, we have had 6 defined trading sessions that have resulted in red candles, meaning that market participants move gold lower based on its opening price compared to its closing price, and on 5 of those 6 occasions, it resulted in lower pricing when we compared the closing price to the closing price of the prior day's trading session. Currently, we have gold up $2, and the August contract is fixed at $1,738.50. Now, this is very much in alignment to a dollar that has stabilized. It is flat at best, gaining 0.02%, an increase of 0.17 points, with the dollar index still fixed at an extremely high level, a 20-year high at 106.915. The first chart that I want to look at on today's show is an extremely long-term view of the dollar index, this chart going back to the 1980s. And the reason for pulling this chart up is the fact that we're looking at current pricing at just shy of 107 and looking to compare that in history to times at which the dollar traded at this level. And when we do that, the first instance occurred approximately 20 years ago in about 2003. However, this was on the way down and it wasn't a significant top, as we can see here at this price point or here, nor was it a bottom as we can see in other instances. Rather, it was during a major price decline as the dollar index was moving from a high at just above 120 till it hit this low of approximately 72. When we look at the last instance before that, it's on the climb up. Once again, it's not really an indication of any kind of a top, bottom, support, or resistance level. And my data only goes back as far as about 1980. And the other instance that we can look at where we can see that it was clearly an area of resistance is one small segment in time. This would be approximately 1989, 1988, when the dollar index was rising from approximately 84 and then stalled at approximately 107. In other words, this price point is fairly insignificant when we compare it historically to how the dollar index reacted at this price in recent history. That being said, we are clearly in a headline-driven financial market, with market sentiment being shaped by upcoming moves of the Federal Reserve as they continue to raise interest rates. If the dollar continues to rise, we want to see how it reacts. If it reaches 107.50, if that is a primary point of resistance, or if market forces take the dollar clearly through that price point. If that is the case, we would have to look at approximately 113 as a next reasonable technical target. Which takes us to our current analysis on gold. Gold is trading overseas and is currently fixed at $1,739.60, a slight uptick from the recent trading activity in New York. In terms of whether or not we could see further downside, we are anticipating that gold could track easily to 1720 before finding a bounce to the upside. But because the recent low in gold came in at approximately $1,730, we are only about $10 shy of this target and could see that as an effective bottom in terms of our technical levels. Therefore, we will remain flat with no active trades in gold or silver and await more data to see whether or not this slight uptick leads to any kind of significant bottom or if we see a return to selling pressure. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.